What if I told you that inflation, the very thing eating away at your savings and making everything more expensive, is actually making certain people wealthier? While most Americans watch their purchasing power diminish month after month, there's a select group of people who aren't just surviving inflation, they're actively profiting from it. Welcome back to the channel. Today we're pulling back the curtain on one of the most misunderstood economic forces in our lives, inflation. You've felt its effects at the grocery store, at the gas pump, and in your rent payments. But what you might not realize is that inflation isn't a universal hardship. It's a wealth transfer mechanism. The average American sees inflation as their enemy, but the wealthy have long understood it as an opportunity. By the end of this video, you'll understand exactly how they do it, and more importantly, how you can apply the same principles to protect and even grow your own wealth during inflationary periods. This isn't about politics or pointing fingers. This is about understanding the economic game being played around us and learning how to stop being a victim of it. Let's dive in. Before we get into specific strategies, it's crucial to understand why inflation affects different economic classes in fundamentally different ways. Inflation is, at its core, a decrease in the purchasing power of money. When the Federal Reserve prints more dollars, each existing dollar becomes less valuable. But here's what they don't teach you in school. Inflation doesn't affect all assets equally. And that's where the opportunity lies. For the average wage earner, inflation is devastating. If you're making $75,000 a year and inflation runs at 7%, you effectively took a $5,250 pay cut unless your salary increased at the same rate, which rarely happens. A recent study showed that real wages adjusted for inflation, actually decreased for most American workers between 2021 and 2023, despite nominal wage increases. Meanwhile, what happens to the wealthy during inflation? Their hard assets appreciate. Let's look at some numbers. During the high inflation period, from 2021 to 2023, the S&P 500 returned over 18% despite significant volatility. Commercial real estate in major metropolitan areas appreciated 15% on average. Fine art saw a staggering 29% increase in value. But for those holding cash savings, their money lost nearly 15% of its purchasing power over that same period. This isn't coincidental, it's by design. The wealthy understand that inflation is essentially a tax on cash and a benefit to those holding specific types of assets. While the middle class struggles to keep up with rising prices, the wealthy watch their net worth grow precisely because of that same inflation. Now, let's break down the specific strategies the wealthy use to turn inflation from an enemy into an ally. One of the most counterintuitive strategies wealthy people use during inflation might shock you. They actually increase their debt, but in very specific ways. While financial advisors have spent decades telling the middle class to avoid debt at all costs, the wealthy understand that fixed-rate debt is actually one of the most powerful inflation hedges available. Here's why. When you take out a fixed-rate loan today and inflation increases tomorrow, you're essentially paying back that loan with cheaper dollars in the future. Your debt stays the same nominally, but decreases in real terms. Consider this example. If you borrow $1 million today at 5% fixed interest to purchase an apartment building, and inflation runs at 7% annually, you're effectively earning 2% on that borrowed money each year after accounting for the cost of capital. Your debt is being inflated away while the underlying asset appreciates. This isn't theoretical. During the inflation surge of 2021 to 2022, real estate investors with leveraged properties saw their net worth increase dramatically, even as their tenants struggled with higher costs of living. According to a 2023 Federal Reserve study, households in the top 10% of wealth holders increased their mortgage debt by an average of 17% during this period. They weren't struggling financially, they were strategically using debt as an inflation hedge. The key difference is that wealthy individuals use debt to acquire appreciating assets that generate cash flow, not to finance consumption. They lock in fixed-rate long-term financing on assets that will rise in value with inflation, while generating income that will also increase with inflation. This strategy isn't reserved for the ultra-wealthy. A middle-class individual can apply the same principle by using a fixed-rate mortgage to purchase a primary residence instead of renting, where your housing cost rises with inflation. Consider a small rental property with fixed-rate financing where rents can be adjusted annually to match inflation. Avoid variable-rate debt, which eliminates the inflation advantage. Remember, the wealthy don't use debt to buy depreciating assets like cars or consumer goods. They use it to acquire assets that will outpace inflation while generating income. The second major strategy wealthy individuals use to profit from inflation is strategic asset allocation. While the middle class has been conditioned to think of investment primarily in terms of stocks and bonds, the wealthy understand that certain asset classes perform exceptionally well during inflationary periods. Let's look at the data. During the last major inflationary period in the 1970s, the S&P 500 returned just 5.8% annually, actually negative when adjusted for the decade's 7.4% average inflation. But during that same period, residential real estate returned 14.2%, gold returned 35.1%, and farmland returned 12.8%. The pattern has held true in our current inflationary environment. Since 2020, commercial real estate in growing markets has appreciated 25 to 35%. Agricultural land has increased in value by 15 to 20% annually in many regions. Commodities like energy, metals, and agricultural products have seen double-digit gains. Companies with strong pricing power, ability to pass costs to consumers, have outperformed the broader market. The wealthy also understand something crucial about inflation. It doesn't affect all sectors equally. While headline inflation might be 7%, certain categories might see price increases of 15% or more. By positioning investments in these specific sectors, it's possible to not just hedge against inflation, but to significantly outpace it. For example, during 2021 to 2023, while overall inflation was around 15% cumulatively, energy prices increased by 28%. Housing costs in high-demand markets rose by 32%. Healthcare costs increased by 17%. Wealthy investors targeted these sectors specifically, not just as inflation hedges, but as growth opportunities. You don't need to be a billionaire to implement this strategy. Here are practical applications for the average investor. Consider allocating a portion of your portfolio to real asset ETFs that focus on real estate, infrastructure, commodities, or natural resources. Explore Treasury Inflation-Protected Securities, TIPS, which automatically adjust with the Consumer Price Index. Research companies with strong pricing power and low debt that can thrive during inflationary periods. If possible, invest in a primary residence with a fixed-rate mortgage. Remember, during inflation, cash is not king. It's the fastest depreciating asset you can hold. Perhaps the most powerful inflation strategy employed by the wealthy is one rarely discussed in mainstream financial media: business ownership. Business owners possess a unique advantage during inflation. They can raise prices. While wage earners must negotiate for raises that rarely keep pace with inflation, business owners can adjust their pricing in real time to maintain or even expand profit margins. The data tells the story. During the 2021 to 2023 inflation surge, S&P 500 companies saw record profit margins despite rising costs. How? They raised prices faster than their costs increased. In many cases, inflation became a convenient excuse to raise prices even more than necessary. resulting in what economists call profit push inflation. According to a 2023 economic analysis, nearly 60% of recent inflation can be attributed to expanded corporate profit margins rather than increased costs. Companies didn't just pass along higher expenses, they used the inflationary environment as cover to expand their margins at consumers' expense. This dynamic explains why corporate profits hit all-time highs during one of the most severe inflationary periods in recent history. In 2022 alone, US corporate profits reached $3.03 trillion, a 16.4% increase from pre-pandemic levels, far outpacing inflation. For the wealthy, who derive most of their income from business ownership rather than wages, this means inflation actually accelerates wealth accumulation. While their employees' purchasing power declines, their own increases. Again, this strategy isn't limited to billionaires. Here's how the average person can implement it. Consider starting a side business in a field where you have expertise. Invest in small business ownership through private equity opportunities or business partnerships. Focus your stock investments on companies with proven pricing power and low debt. If you work for someone else, position yourself in roles where your value is clearly measurable and tied to company revenue. The key insight here is that during inflation, you want to be the price maker, not the price taker. Those who can set prices win, while those who must accept them lose. The final strategy wealthy individuals use to profit from inflation involves understanding the cyclical nature of monetary policy and timing financial moves accordingly. Inflation doesn't occur in a vacuum. It typically follows a pattern where economic stimulus leads to increased money supply. Excess liquidity drives up asset prices and consumer goods prices. Central banks respond by raising interest rates. Higher rates eventually slow the economy, potentially causing recession. Central banks then cut rates to stimulate growth again. The cycle repeats. The wealthy pay careful attention to where we are in this cycle and position their investments accordingly. For example, when inflation first begins to accelerate, but before central banks respond aggressively, it's an ideal time to lock in long-term fixed-rate debt. Purchase hard assets that will appreciate with inflation. Reduce cash holdings. Position investment portfolios toward inflation beneficiary sectors. As central banks begin aggressive rate hikes to combat inflation, the strategy shifts to hold off on new long-term debt until rates stabilize. Begin accumulating cash for upcoming investment opportunities. Position for potential economic slowdown. Look for distressed assets as higher rates pressure over-leveraged owners. The timing of these moves can dramatically impact returns. During the 2021 to 2023 period, investors who recognized the inflationary signs early and positioned accordingly saw portfolio growth of 25 to 35%, while those who reacted late suffered significant losses. A recent analysis of high net worth investment patterns showed that wealthy investors began shifting assets toward inflation-protected investments in late 2020, nearly 6 months before mainstream financial media began discussing inflation concerns seriously. For the average investor, this means pay attention to leading economic indicators and monetary policy changes. Don't wait for mainstream news to confirm inflation trends. Understand that different assets perform differently at various points in the inflation monetary policy cycle. Be proactive rather than reactive with your financial strategy. While perfect timing is impossible, even approximate cycle awareness can significantly improve investment outcomes during inflationary periods. We've covered the 4 primary strategies wealthy individuals use to profit from inflation. Strategic use of fixed-rate debt to acquire appreciating assets. Investment in real assets that outpace inflation. Business ownership that allows for price adjustment. Timing financial moves with inflation cycles. The key difference between those who suffer from inflation and those who benefit from it isn't necessarily the amount of wealth they start with. It's their understanding of how inflation works and their willingness to position accordingly. Let me be clear. I'm not suggesting inflation is good for society overall. It creates real hardship for millions of people, particularly those on fixed incomes or without the knowledge to protect themselves. But understanding how inflation transfers wealth can help you move from the losing side of that transfer to the winning side. Here's a simple action plan to get started. First, audit your current inflation exposure. How much of your net worth is in cash or fixed income investments that lose value during inflation? How much is in real assets or businesses that can adjust with inflation? Second, consider your debt strategy. If you have high-interest variable rate consumer debt, focus on eliminating it, but don't fear strategic fixed-rate debt used to acquire appreciating cash-flowing assets. Third, begin building your inflation-resistant portfolio. This doesn't require millions of dollars. ETFs focused on real estate, commodities, and inflation-protected securities are accessible to most investors. Fourth, develop your own ability to generate income that can adjust with inflation, whether through business ownership, freelance work, or positioning yourself in roles where compensation is tied to company revenue. Finally, educate yourself about monetary policy and economic cycles. Understanding where we are in the inflation cycle can help you make better timed financial decisions. Inflation may be inevitable in our fiat currency system, but suffering from it is not. The strategies that have historically been reserved for the wealthy are increasingly accessible to anyone with the knowledge to implement them. If you found value in this video, hit that subscribe button and share it with someone who needs this information. The more people understand how inflation really works, the better equipped we'll all be to protect our financial futures. Until next time, remember, in the world of finance, knowledge isn't just power, it's profit.